Welcome. We appreciate you joining us for our virtual sessions. As part of our regularly scheduled Hotel Owners Academy, we have sessions throughout the year, and today is no different. We have a great session today, again, with Kalibri and Jennifer Hill. We'll get that started in just a moment. So if you've not already done so, make sure to register for AAHOA 26 in the great city of Philadelphia. Jennifer Hill and Kalibri will be there, as will Cindy Estes-Green. They are actually going to be delivering one of the certifications live at AAHOA this year. With that said, and without further ado, I don't want to hold up today's presentation. So Jennifer, welcome. Glad to have you with us. How are you today?
I'm doing well, Sean. Thank you so much for having me. So we're looking forward to working with all of the AAHOA members in 2026. So as Sean mentioned, we are going to have a new certification, a profit analyst certification that's going to be live the Wednesday of AAHOACon. So really excited for that. The QR code on my background and one that I'm going to share with you later is going to go to the existing profit strategist certification. So just so you know, if you sign up for that, there is a fee. It will be listed. Happy to answer any questions, any and all questions that you may have about that. My email I'll drop in the chat for Sean and Michael to share out, or maybe if they could just do that. It's Jennifer@kalibrilabs.com. Always happy to support you guys. So let's get into it. We're talking a lot with owners and our management companies, asset managers, pretty much everyone today, meaning moving into 2026, about profit strategy and the economics of hotels. Really how we are profit first and how that can help you be successful, and what you can do as owners, as owner operators, as owner representatives, and what you can do just in general, whether you have one hotel or you have 100 hotels. So as we get into what we're talking about in terms of profitability, we have to really think about what challenges exist. And so you may have seen us present on these topics before. There is really a core triple threat to the hotel industry in terms of challenges that we overcome on a regular basis. So we have access to customers, of course, an evolving loyalty landscape. And then the number one is profitability, right? As investors, as owners who are all dealing with this on a regular basis. And when I show you the 2025 overall results, unfortunately, they're not as positive as we would have liked for the year to be. But we knew that as we were working through 2025, there were lots of changes and lots of impacts to our industry as a whole, no matter where you are located. So we talk a lot about profitability at Kalibri, of course, but we also really have to be focused on how that comes to be. So, profitability isn't just a great star report, because you can't take a star report to the bank and deposit it and have that cover payroll. We have to really be thinking about how we're getting cash to flow to the bottom line. So not only are we covering expenses, but we're making some additional money. So Leslie Hale, who is the president and CEO of RLJ Trust, shared with us this quote. She mentioned something along these lines and then gave it to us as a quote to use as part of this program, because it is really important to note that, even post-pandemic, for the last decade or so, we've been punch drunk on low interest rates, right? It was really easy to buy an asset, take the spread between interest rates, and now we have to really focus on growing cash flow. We need a business plan for our assets in order to create value. And that is where we can support you. In terms of Kalibri supporting the industry, we like to encourage you to think about how everyone is operating. AAHOA obviously is a great resource for this as well, because if we're all tackling it at the same time, then we're likely to be able to solve for it and keep this really profitable, meaningful investment. But right now we have a simple math problem. There's muted revenue growth of 0 to 3%. Our forecast for 2026 is a range. Really, we're landing at a negative result year over year, so a -1% is our lowest end of the forecast. And then we're expecting potentially, if all goes well, America 250 is as exciting as we want it to be. World Cup is as promising as we need it to be, that we could end up 1.5% up in RevPAR year over year, 2026 versus 2025. But essentially, even if we're looking at 0.5% up or 1.5% up, those aren't huge numbers like we've been experiencing the past 5 years. We have muted revenue growth. For all intents and purposes, it's flat. We also have really persistent spikes in expenses. And these, again, this isn't new information. These aren't new things for me to be telling you. We have persistent expense spikes that are 5, 10%, even upwards of that. And we have to really be thinking about how we're running our hotels as profitably as possible to accommodate and overcome the increase in interest rates, insurance, property tax, renovation reserves, labor, as well as cost of acquisition. So we want to ensure that you are running the hotel profitably, that your real estate asset valuation is no longer at risk, and that we can continue investment in hotels, right? So we're going to move away from legacy benchmarking and sort of a simplistic underwriting model that we've used in the past. So we are able to provide data that helps hotel owners grow revenue, number one, and equally as important, grow asset values. So primary target right now, labor and cost of acquisition. If you think about what your labor cost is at your hotels or in your portfolio of hotels, on average, we're hearing from partners and just in general from the industry that's 35%, maybe seasonally, sometimes higher, sometimes a little bit lower. Cost of acquisition in terms of getting that booking, that guest to your hotel can range between 20 and 30%, right? So it is second only to labor cost in terms of cost of customer acquisition. So we want to highlight that data point for you, really help you understand how that can impact your overall business. So we do that in a number of ways. We track different types of revenue at Kalibri, and I'm going to define these for you because then I'm going to show you the full year 2025 results, and this will be helpful information in understanding what that looks like when we look at full year 2025. So we collect revenue data from over 35,000 hotels in the United States. We call this hotel collected revenue, but this is the metric that we're all most familiar with. This is tying back most closely to your own financial statements, to the STAR report, to other benchmarking tools. We are the only benchmarking tool that have cost of acquisition data. So we're able to actually take that hotel collected revenue, gross it up. So that's your OTA margins and markups. And we gross that up to calculate guest paid revenue. Guest paid revenue is as straightforward as it sounds. This is what the guest is paying to stay in the hotel, whether it is directly to the hotel or through a third party. So imagine a guest pays $100 on IHG.com and they pay $100, a guest who pays $100 on Expedia.com, right? So our guest paid revenue in that case is $100. Now, what the hotel collects from IHG or from brand.com is probably 97 of that $100, but what the hotel is going to collect from the Expedia or Booking.com booking could be $90 or $85 or $82. And that is really the difference between the guest paid and the hotel collected, is what a third party is keeping. We account for more than just the OTA margins and markups, so more than just third parties. We also account for traditional retail commissions. So that's 10% to AAA or to Carlson Wagonly. We also account for loyalty investment. So that's going to be the percentage paid back to the chain to award guests their brand loyalty points, as well as channel costs and transaction fees. And we deduct all of those from what the guest paid on the far left from from what the guest paid to calculate a kind of net revenue metric that we call COPE revenue. So sometimes we joke that it's a way to cope with your distribution costs, but it is an acronym. It means contribution to operating profit and expense. And I really like to look at this and think of this more as what we're keeping from what the guest paid and what we're sending along to the bottom line to help cover those operational costs, right? So guest paid, hotel collected, COPE revenue. And then of course we can't forget that a lot of hotels have additional sales and marketing expenses, whether that's strictly marketing fees, maybe you work with the brand for those, maybe you have a third party, or you have a sales manager, or you're hiring a company like Jocko Russo or someone like that who is supporting sales in some or all of your hotels. We'll also account for that and calculate a simple net revenue metric. But we're really focused on understanding before anything gets passed along to cover operational costs, whether they're fixed or variable, what we're keeping from what the guests have paid. And this is how we do that. And when we look at that for a total year, so this is kind of the where we are, and then we're going to get to a little bit more of what we can do about it. Unfortunately, we did see a decline in revenue performance overall year over year, but we're also seeing a decline in something that we call revenue capture. So when you look at this from top to bottom, you have our 4 revenue types on the left. The top bar, the blue bar, is 2025 performance, and then the red bar is 2024, or the bottom bar. So guest paid revenue was essentially flat last year, so $211.4 billion versus $211.1 billion. Of that $211 billion, we paid about $6 billion in margins and markups. So the hotels collected $205 billion. You take into account those other acquisition costs that I defined earlier, and we're looking at a COPE revenue performance last year, total US of 195.3, again, essentially flat. But when we get to the net revenue and we're thinking about those sales and marketing costs, we actually spent more to acquire roughly the same amount of revenue last year. So our net revenue declined $2 billion. And I am saying billion with a B. I am getting over a cold, so I know I sound a little nasally, but I do want to just confirm that if you're hearing billion, I am saying billion. Keep in mind, this is again, total US. So what do we mean by revenue capture? Revenue capture is a simple calculation. We're going to take the net revenue and divide it by the guest paid revenue, right? So bottom divided by top. In 2025, our revenue capture fell below 80% for the first time. Even, obviously, if we exclude 2020, but it's even lower than it was in 2021. And it's down 111 basis points year over year, which is pretty significant. And that $2 billion in revenue capture, what that 1.11% equates to, equals over $29 billion of reduction in our hotel asset values. So that is one of the big problems that hotels are facing, is how do we keep our investment positive? How do we keep this an asset class that we want to continue investing in? And we have some answers for that. So don't worry. And I do see the question, will we receive slides after the call? Yes, absolutely. I'll be glad to share these with Sean and Michael, and they can send them out so that you have them. And you'll also get my contact information. So if you have any questions or want me to walk you or your teams through anything, always happy to do that. So declining revenue capture, decreased asset value. Then we want to look at, well, we have been on the upswing, right? Big picture, from 2019, which was our last historic year before the impact of the pandemic. Our RevPAR on the left was $87.50. It continued to grow. It tipped just over $100 in 2024. and it tipped back under $100 in 2025. But meanwhile, we've seen a significant and consistent decrease in what hotels are capturing in terms of revenue. That revenue capture percentage dropping from 83 in 2019 to 79.2 in 2025. And you're like, can it be stopped? Yes. There is obviously some solutions that we'll propose that you may have answers to in your own hotels. But one of the biggest things to remember is that this is, really the first time that we're looking at data in this way and really understanding that revenue capture and equating that overall performance to asset value. Because as Leslie Hale said in that quote earlier, it has been easy for the last 10 years or so with really generous interest rates to sort of financially engineer those returns that look really good. So I'm going to walk through an example that hopefully will connect the dots a little bit more in terms of asset value. My guess is that all of you know more about owning a hotel physically than I do. But this is a way that we get people, whether it's a management company or, again, sales and marketing support, really just everyone thinking about what it means to asset value when we're talking about revenue capture. So for this example, we're going to use a hotel with $5 million of guest paid revenue. And we're going to use an 80% revenue capture. So again, remember just now I shared with you, unfortunately, we dipped below that for total US performance in 2025. So if we have $5 million in guest paid revenue, we're keeping 80% of that. That net revenue is $4 million. For this hotel, our operating cost is $3.4 million, giving us a net operating income of $600,000. And if we apply an 8 cap in order to calculate the asset value, we end up with an asset value for this hotel of $7.5 million. Okay. So let's imagine that this hotel, like most hotels in the US, dipped from 80% revenue capture to 78% revenue capture. We're still working with that same $5 million, but our net revenue is now $3.9 million. Our operating costs are the same because we're doing the same amount in revenue, but our NOI changes from $600,000 to $500,000. That means that our asset value decreases to $6,250,000. So just a shift of $100,000, the overspending essentially of $100,000 for our hotel with $5 million in guest paid revenue is going to equate to over $1 million in lost asset value. Now let's look at a hotel that thinks about profit first and really is thinking about the profitability of that $5 million. So we're going to go from an 80% revenue capture to an 83% revenue capture. And that's going to give us net revenue of $4,150,000, which is increasing our net operating income to $750,000 and our asset value to over $9 million. So with $150,000 more that we're keeping in terms of that revenue capture, we're increasing asset value by almost $2 million. I'm going to be really generous and round up and say that we're looking at $1,875,000. It's almost $2 million. So it's a big difference when you think about going from 80 to 78, and then we think about going in the other direction from 80% to 83. I understand this might be a very new way of thinking about this altogether. So in addition to understanding how revenue capture equates to asset value, I also like to use the example of that first $100 reservation I talked about in terms of guest paid revenue. So if you think about $100 of guest paid revenue and a 78% revenue capture, that's essentially like by the time the guest walks in your door from booking their reservation, you have 78 cents or $78 of that 100. So 78 cents on the dollar. Think about what you can do for an extra nickel or an extra $5 for every single reservation. It really starts to add up. And that's using a really simple calculation of $100 per room. Okay. This slide is intentionally blank because I feel like it's a good place to say, take a deep breath. There is obviously, a lot of nuance and complexity to this. We can take into account a lot of different information overall and make more informed choices. So we like to say we are not powerless. We can build actions around more profitable data, most profitable results for an individual hotel. Our CEO, Cindy Estes Green, who some of you may know or will have a chance to meet in Philadelphia in April, is good friends with Liam Brown, who's the group president or retiring group president at Marriott. And he has specifically said to us, we have to stop sacrificing profit on the altar of top line revenue and market share. And it really is so true that, again, RevPAR index is a great indicator of performance. There's a lot of business that's written around that, whether it's your hotel management agreement or your franchise agreement, but we can be as concerned with top line revenue and market share as we are with profitability and be really successful. So providing guidance on the best way to spend time and money that results in the most profit and highest asset value is what we're here to do. So in addition to what we provide in terms of product at Kalibri, really from a certification standpoint, a lot of this is the baseline. This is the foundation, understanding the context of where the industry is performing today, the problem that presents for hotel owners and operators, and then what actions can be done. So providing the tactical breadcrumbs to execute on the results that will get you the most profit. So one of the things that I've mentioned a couple of times, and we're talking a lot more about these days, is being profit first. So, really thinking about how we drive as much profitability as possible in order to drive the highest asset value. And a lot of times people ask what that means. So there are 4 key components here. So when you make profit your North Star, you really make it your guiding point from a revenue perspective. This means that you're identifying your most profitable mix of business and you're aligning your sales and marketing spend with the best that you can achieve. So we're no longer spending $50,000 a year on Project X because we have always spent $50,000 a year on Project X, unless we can prove that Project X is our most profitable revenue. From a labor perspective, to put profit first, we're going to align variable staffing with volume and non-variable staffing with market opportunities, right? So we do this a lot as it is, but this is going to give us more data to work with. From an operations perspective, we want to ensure that our services are aligned with the most profitable business mix and that we can ensure consistent and efficient delivery. And of course, from a financial perspective, we're really going to focus on ensuring the leadership team understands the signals for a hotel's financial health. So that doesn't mean that a front office manager is going to be as read into a P&L as the owner or the general manager, but it may mean that you're talking with them more about what specific decisions mean. And that's really where we're going with the 2 certifications that we're partnering exclusively with AAHOA for right now, is that certified hotel profit analyst, sort of that, I don't want to say lower level, but it's that first stage. Maybe it's a front office manager, maybe it's a general manager who's new to the industry, who's going to understand these components of keeping profitability high as possible. And then the strategist is the next level up. That's, an executive or someone who's growing in their career. We did start with the strategist certification. Again, that's what's available today. And the analyst certification is going to be about a half day on April 8th. But what this means is when profit is our North Star, is that it becomes everyone's job. It's not just the owner's job. It's not just the general manager's job. I know sometimes there are really small teams and we could be talking about a total of 3 people, or we could be talking about 30 people. but it is everyone's job, no matter what scale you are running. So here's more quick snapshot again. Certified Hotel Profit Analyst is highlighted because it is up and coming. Again, we're going to be doing that for the first time on April 8th. And the Certified Hotel Profit Strategist, either this QR code or the one behind me, is going to take you to a place to register for that. You're going to land on a sign-in page, but if you click the sign up button, it will take you to all of the information you need to know. So when we're talking about additional solutions, we're also thinking a little bit differently about how we make decisions, right? So it's no longer just about performance, but we want to change the way we're making decisions for our hotels. And we have to think about how we have historically made decisions in order to do that successfully. So when we look at the evolution of profit strategy for revenue, not like revenue managers or revenue department, but revenue for your hotel, we've had different lead sources, whether that's sales or brand or third party, sort of dumping everything into our funnel for us. We had a filter for rates and inventory, which is the revenue management system. And then we're measuring performance by RevPAR and RevPAR index. Pretty standard. But what we want to do and the way to achieve the most profit and highest asset value is to really make the commercial team one, so that they're evaluating all of the opportunities together, making decisions around how we're deploying staffing, how we're covering labor and services, and that spending, whether it's time or money, are aligned around the most profitable revenue opportunities. We're still going to allow the revenue management systems to filter for rates and inventory, but in terms of what we measure, we're going to measure profit contribution. And we're going to do that through that revenue capture, which again, for 2025 total US was a little over 79%. And then profit mix, which is a tool that's specific for us. So I'm going to take just a quick second to answer the question. So there are two here. What is the cost for AAHOA members? So for the existing certification, AAHOA member pricing is $550. And then the analyst certification is going to be $199 to start. I am going to make sure that we confirm that and include it with the slides for you as a follow-up. I know that this is going to be on YouTube, but just know I'm quoting those from memory, but I'm pretty confident for the first 6 months, the certified profit analyst is $199, and then the AAHOA member pricing for the existing strategist certification is $550. And the second question is there a tool out there that can actually provide net ADR analysis? The answer is yes. We actually provide one. I think there are a couple of other tools. I'm actually all for competition, but we are the first and only tool that has cost of acquisition. So really able to tell you what that net revenue and therefore the net ADR is. So we can talk a little bit more about that at the end. So when you're thinking about your most profitable mix, or how you get from point A to point B, which of course is, where you are today to being more profitable, planning ahead. Maybe you wrote a budget or a financial plan for 2026 last year. If you're focused only on top line, you're going to put a revenue target, let's call it 5% growth. Maybe you hold your management companies to this, or at your own hotel, you say, I really want to grow 3% next year. Great. And then you work backwards from that growth and you build a business mix to match your growth target, which then forces you to do number 2 on the screen, which is pursue business found in the market to hit that revenue target. And what often happens is like mid-June, July, mid-year, you're really starting to think like, we're flat year over year. How are we going to get to that 3% growth? It's like, well, if that 3% was sort of an arbitrary number, really have to go back to the drawing board and historically, and I've been, guilty of this myself. So I get to that mid-year point and I say, well, I said I'm going to grow 3%. I've got to do it no matter what the cost. That's silly. That doesn't make sense. That's not a profitable path forward. So what we want to do is move from, starting at the growth number, which is often arbitrary, and chasing the treasure on the treasure map that way. Let's figure out first, what is the hotel's most profitable business mix based on true demand in your market. Then you're going to set a spending cap of marketing dollars, and it doesn't have to be $1 million, even $100,000. It could also be how much time you're going to spend on those opportunities, and you're going to build tactical plans to acquire each part of your profitable business mix, which means that you might have a different starting point. So it's a different way of looking at the map, and it's more with the end in mind already, bottom up, right? We're going to say, what's the business mix? How much are we realistically able to grow? So if we make profit our North Star for revenue acquisition, and there are some questions that we'll need to have answered, we'll need to know the value of our most profitable mix, how much it's worth, which hotels in our market have it now, when is it coming, which channels, what's the booking lead time, what's the length of stay. And then we also need to decide how much we're going to spend. And I do mean money, right? Like in this case, I am saying, how much money are we going to spend? How much are we going to invest in sales payroll? How much are we going to invest in marketing? When the brand comes knocking for marketing spend, how much are we going to agree to spend? But I'm also talking about spending time. If you're chasing a lot of really low rated group opportunities all the time, and it takes a lot of time to service those groups, it may not be profitable. So we have to first identify if it's profitable and if it's worth your time to continue chasing that opportunity. So these are the questions you would answer in that regard. What's the cap on spending? What's the target revenue capture? How much can you afford to spend? Is it flexible? And then which rate categories are you going to target specifically for those opportunities? It doesn't always have to be a rate category and channel combination that you're targeting. It could be a net ADR that you want to grow. Maybe you've made an investment, you've completed a PIP, and you want to see a return on that investment. So you have a net ADR target or goal in mind. That's a place you can start too, but you need to have a goal and then decide how much you're going to spend to reach that goal. They do have to go hand in hand to be as successful as possible. So when we're thinking about what business we should target, we really have to identify what business is available and not just competing with hotels where we don't know their business mix, right? Got to figure out essentially what it looks like to understand the full picture of demand in our market. So we talk a lot about comp sets, right? How we're competing our hotel versus a group of 5 or 6 hotels. Traditionally, we've set these up, and again, I know these are required by pretty much every hotel for business reasons, whether that's the bank or your investors or the management company or the brand. Traditionally, we've matched comp sets by rate, proximity to one another, service levels, and then we put blinders on and we kind of get hyper focused on just those hotels. And that's not always the best way to identify what business actually exists to capture. So we never want to set you up where that's the only view you have, because it forces you to, at best, be average. You could be above average if you're running like a 110 RevPAR index. But because an index is a ratio of your performance versus the average performance of your competitors, you're at 100 RevPAR index, only average. And sometimes it can be a race to the bottom. So, we don't want you to win that race. We want you to be the most profitable you can be based on the conditions of your hotel and how much you are able to spend on your opportunities. So when we look at market share and your actual opportunities, our data-driven comp sets shifting into how Kalibri can support you matches your hotels by the demand curve. We focus on distance. There's a correlation between room nights based on your booking lead time, pattern, day of week, pattern of stay, as well as like meeting space to rooms ratio, and then brand strength that's measured by loyalty contribution. So that gives us the opportunity to show you who you compete with for which specific types of business on which days of the week. So you're a lot more competitively intelligent, meaning there's more knowledge for you to take advantage of. So just as I get my last couple of slides queued up here, think about questions you might have. I want to be sure that I answer any of those before we wrap up and leave you with a few questions, right? So, there are 5 steps. There's obviously more than this in the whole scheme of things, but when we're thinking about managing acquisition costs, there are 5 steps that we've outlined for smart financial and commercial planning. The first is, as we've talked about for the most of today's session, establishing a target revenue capture. But what that means is how much can we realistically keep from what the guest is paying. Then we want to set those revenue and business mix targets. Then we want to optimize the mix for profitability so that we're focusing on business that both grows revenue and grows profit contribution, right? We're checking both boxes. Yes, if we pursue this opportunity with either time or spend, it is going to improve our revenue performance, and it is also going to improve our profit contribution, which therefore will improve our asset value. And then we'll assign those additional expenses, so those discretionary sales, marketing, whatever the case may be for your specific hotel and market. And then you're going to develop the plan and execute on it. And for some hotels, if you're 60 keys in a smaller market, that might be 1 or 2 opportunities that you're focused on for the whole year. And that's okay. It is proportionate and specific to your hotel. And that's really the key. It's, not one size fits all. So reminder, just, we're thinking, and as we go into 2026, deeper into 2026, I know it's February already, we're really thinking you put profit first. It becomes everyone's job. And from each one of these 4 areas, revenue, labor, operations, financial, if that is the end goal and the focus to start, then it's easier to achieve. So when we talk about what we have to support you in terms of tools, we have Hummingbird Commercial. So Hummingbird Commercial is a one-stop shop for understanding your opportunities, but also measuring your performance. So this is a great alternative to CoStar, quite frankly. It also has over 230,000 named corporate accounts. So if Amazon is building a new warehouse in your market and you want to know how many Amazon room nights there are, we can tell you that. We can tell you how many Corpay room nights are traveling through your roadside motel, hotel area. For the type of, I grew up working in a hotel off Interstate 81 in Chambersburg, Pennsylvania, and we had a truck parking lot, right? Like knowing that Corpay business would have been so valuable to us. So we have a tool within Hummingbird Commercial that shows us that. And then we also have profit mix. So if you are making the shift to really be focused on profit first, we can support you in that. And if you are looking for a new investment, you want to understand who or which markets might be beneficial for you to build in, we have another tool called Hummingbird Market. These both are available to AAHOA members at a discount. I'll be sure that we include the specific discount percentages in the follow-up. And this is also all available on our website too. So I'll be sure that you have a link to that. So you don't always have to keep track of that one email. But that is all for me today, Sean. I know I went kind of fast, but if there are any other questions, please feel free.
Yeah, so Jennifer, there was another question in the chat box. It's a long one, so I think
Yeah.
it's more of a statement and then a follow-up question. So it says,
Okay.
in 2023, we noticed that franchisor revenue management services did not take net revenue into consideration. We switched to a third party and explained our need to grow revenue. Have you heard similar trends? Is question one. Is the franchisor addressing the net revenue issue with their revenue managers? I don't know that we can answer those questions, but I'll turn it to you.
Sure. I think from a trend perspective, I'm absolutely happy to say what I see when I'm working with our clients or prospective clients. Yes, it is a trend, but it's not. I don't think it's. This is me personally speaking. I don't think it's an intentional trend. I think there has been a lot of opacity. It's not really been easy to see net revenue. So what I will say on behalf of franchisors, and I don't know the specific one you're talking about, but we do work with all of the major chains in the US, IHG, Marriott, Hilton, Choice, Sonesta, that we also partner with them for their own chain and brand data performance. So if it's not made it yet to the revenue management services, we certainly across the board are talking with all of the chains to help them understand the value of this data and then how to use it. So as you know, the hotel industry isn't like the quickest to make changes. But so I will say, just on behalf of franchisors, again, I can't speak for everybody or how they're doing their revenue management services, but we do partner with them because they're our data providers. And that helps me kind of move to the next question that I see that I didn't answer earlier was, does it integrate with Opera? So that's a really great question. So I will share with you that we have 35,000 hotels in our database, again, across all of those chains I just mentioned. And we can also integrate with small chains or independents if you have Opera Cloud, Stay in Touch, Jonas Quorum, HMS. There's at least one more that I'm not mentioning. And then by the end of this quarter, we'll also be able to integrate with hotels that run Muse. Our next projects, we're a small team, we're about 60 people, but our next PMS integrations are going to be in the probably cloud beds realm, maybe ASI this year. So, we do that based on demand. The more hotels we can get in by doing those integrations, the happier we are, the happier you are. So those are some of them. And then another question here. Does your platform analyze and spend efficiency across OTA for better optimization? We don't specifically analyze your ad spend, but COPE revenue is a better informed starting point for you to analyze that, or for the team that you've hired, whether it's a third party or your brand support, to do that. Because that is a really variable cost, and sometimes it might be $100 a day or $100 a month. We wouldn't be able to know that, but COPE revenue is a better informed place for you to start with that analysis. And then, Sean, I realize I'm taking your hosting duties as well, but I have one more question here. How much does it cost for Hummingbird Commercial for an AAHOA member? Great question. So we try to keep it really simple. Again, happy to give you a quote specifically for your hotel, but just for everyone's benefit, there is a 5% discount for AAHOA members if you sign a 1-year agreement, and that doubles if you sign a 2-year agreement, so you get 10% off. It is your AAHOA member number, and you can put that in our system and it calculates it for you. The pricing is tiered based on the type of your hotel. So it's between $2 and $3 per room per month. So if you have an upper upscale or luxury hotel, it's $3 per room per month. If your hotel is mid-scale or economy, it's $2. So we try to keep it fair and in line with like what your average rate may be, but also happy to create a proposal specifically for your hotel or hotels. Another question. Thank you so much for the questions. This definitely keeps it more engaging for everybody. Can you add more details on AAHOA for the certification course? Right now, it's only on the agenda with nothing. Click on for more detail. That is because we only gave Sean and Jody and the team, we'll take credit for this at Kalibri, I think on Friday afternoon, the final wording for it, because we're finalizing what the content is before we advertised it. So there are going to be modules. We're going to have labor, operations, financial, and revenue. So those 4 boxes that you saw earlier are kind of a hint for that analyst certification. So it's going to be roughly, I think it's going to be scheduled for 5 hours, but that will include a lunch break and a couple of bio breaks. So you'll be able to take in all of the information from Kalibri, a really shortened version of the strategist certification, as well as some certification content from some of our partners on the labor and financial side of things. So more to come on that. Again, that copy for the website was approved just, again, that was on us late last week. So you should see more information on the website soon.
And Jennifer, I'll just add to that. I do want to make everyone aware that this will not be taking you away from other information at AAHOA. So this will be held on Wednesday, and then Thursday and Friday are our general education sessions and our keynotes and things along those lines, our business session, as well as the trade show. So this will not impede your ability to navigate the trade show or any of the other great sessions that'll be available at AAHOA. As a matter of fact, Jennifer and Cindy Estes-Green will be delivering one of those ed sessions as well. So we're excited to have that partnership. So, and by the way, Jennifer, you are always welcome to take my hosting duties because you're excellent and we enjoy the partnership, and you're sharing incredible information. I do see one more question that came in. Are there AI influence recommendations on the commercial platform?
Yes. So AI, and I can't believe that I actually got through almost an hour so far and haven't said it until now. Our algorithms are driven by AI. And what I mean by that specifically is machine learning. We also are doing some research and development using large language models, something more like you might be using on a day-to-day basis with Gemini or Copilot or ChatGPT. But for the last 6 years, we've been building our algorithms using machine learning. So in that regard, yes, AI is very much an influence in the Hummingbird commercial platform, but specifically around recommendations. I made a point to mention the research and development that we're doing because we are going to have the goal, we don't yet, so I do want to emphasize that, we don't yet have like AI-driven recommendations, but our goal is to offer that so that based on what your hotel's opportunities are, there are going to be equivalent recommendations that your team can take. Today, we have standard recommendations in, so they're definitely not AI-driven, but they are there. If you have somebody who's new to the industry or maybe new to your market, you want to make sure they're doing like the key things that a hotelier should do. Those action items and recommendations are in the system today, but we are looking to move toward a more dynamic recommendation system. So that is to come.
Excellent. I don't see any other questions coming in at this moment, Jennifer, so I'll take this time to say thank you for your participation in our virtual learning experiences. We certainly appreciate it. As I said, there are incredible opportunities for profitability, and Jennifer and Cindy at Kalibri are leading the front in this. We value the partnership. I myself plan to take both certifications as soon as the time allows for it. I got to tell you, folks, attend AAHOA. We've got a great lineup, including this great information from Kalibri and the certification. Obviously, we have other ed sessions that are coming. We've got some great keynotes. It's going to be a really good time in Philadelphia. So if you've not already registered, please do so. With that said, thank you for joining us today. This has been an incredible session. Jennifer delivers wow and excellence every time I see her. So we thank her and thank you for attending today. We will see you next time on the Hotel Owners Academy. Have a wonderful day and a fantastic week. Thanks, everyone.